Hello, beauty entrepreneurs. It's Kanisha, the Beauty CPA here. Today, we are going to be talking about what you should consider when you're making the choice of choosing a business entity structure. So, that's what we're going to be talking about today. Before we get into that, I do have a couple of updates. I am going to be reminding you guys as much as I can of the upcoming extended due dates for your tax return. So September the 15th, which is in about 12 days, the S corporation return is due and the partnership return is due. So the form 1120S for S corporations and the form 1065 for partnerships. Those are due September the 15th. Do not wait to the last minute. Start that as early as possible. Okay. October the 15th, the Form 1040, the individual tax return, and the C corporation, those tax returns are due. So Form 1040 for individuals, and if you are a Schedule C filer, that's also attached to your 1040, as well as the Form 1120 for the C corporation. Those due dates are mid-October if you extend it. So if you got the 6 month extension, your due date is coming up mid-September and mid-October. So guys, do not forget those. I'm going to be reminding you as soon as possible. There's another due date coming up. So the quarter is closing. Q3 is closing at the end of this month, September the 30th. Q3 quarterly estimated tax payments are going to be due. So remember that as well. Um, some of you may not be paying quarterlies, but I want you to start, okay? Because we went over this on the last live I went over. I got a question, the tax town hall. I got a question about, what are they? Should we be paying them? And, basically, if you're over a certain amount, I believe it's, if you estimate that your tax liability is going to be 1,000 or more, and that's after all of your deductions and credits and stuff. So your final tax bill, if it's at least 1,000 or more, you should be paying quarterly. So um, that due date is September the 30th. I also want to remind you guys, I have a new text club, the Beauty CPA Text Club. This is awesome because now I get to notify you. You get early notification of when I'm planning to go live. You get private invitations to any like secret and exclusive webinars I'm giving. When I have these webinars, they are masterclass style. So I'm really giving you, dropping the gems, giving you the juice on real tax strategies and cash flow management strategies you can be using to increase, this money that's flowing through your business. So you want to be notified of those. So you can text the word beauty CPA, all one word, beauty CPA to 2100 to get into that text club. You're also going to get gift cards. I give gift cards. So if I have any products or services that are available that have a cost to them, you can use the gift cards I'm going to be giving out through my text club. You can use those to purchase the products or the service. You're also going to get cash flow and tax tips, you know right to your phone, so you can utilize those to increase your tax savings and increase the cash flow in your business. So, to get all those exclusive freebies, tips, and tools, text the word or the phrase beauty CPA, all one word, to 2100. Yesterday I opened cart for the pre-sale to the ultimate tax planning guide for beautypreneurs. That digital product is 2100, 21000. Oh, I'm sorry. That's 21,000. I'm sorry. That's my bad. 21000. 21,000. So text the word beauty CPA to 21,000 to get into the tax club so you can get all those, those freebies, those tax and those tools. Thank you so much for telling me that. I'm just like so excited about it all. I'm saying 2100. It's 21,000. 21000. I just text my group, the folks that are in there already. I text them a $10 e-gift card. last night because the ultimate tax planning guide for beautypreneurs that is now on pre-sale in the open cart was last night. And I was able to text everyone a $10 e-gift card to purchase that. So I'll talk about that a bit. We just wrapped up the tax planning series. I talked about tax planning, the tax planning framework that I use to identify tax opportunities in your profile. I talked about that for like 6 weeks. We just wrapped it up beginning of this week. I offered free tax strategy sessions, but everyone didn't get the opportunity to schedule a 30-minute, tax session with me. So what I did, I wrote a product. I wrote the tax planning guide that goes through that 6-step planning framework that I use. And I packaged it into a digital product so that if you didn't get a chance to get one of those free tax strategy session slots with me, you can purchase this product that will help you identify tax saving opportunities within your business, within your personal financial profile, and save on taxes all year round. Because remember what I said, guys, that tax is not a season. Tax is all year round. You should be looking for ways to save money all year round. Every time you make $1, the tax man is coming for about a third of that. How can we decrease that amount? And we want to be thinking about that all the time, not just when it's time to file a tax return, because by then it's too late. So we're going to change our mindset, and tax is not a season. Tax is year round because you make money year round, and we want to protect that money. We want to keep more of that money and not give it away to taxes. So the digital product, the ultimate tax planning guide for beautypreneurs, it is on pre-sale right now. The regular price is $37. It is on pre-sale for $19. If you text the phrase beauty CPA to 21,000, you'll get a $10 e-gift card. So that brings the sale price of $19 down to $9. So you're going to get this guide that could, it could save you thousands if you actually implement the strategies. It could save you thousands, and you're going to get that for $9. This is on sale until Labor Day. Through Labor Day. When it turns, after 11:59 Eastern Standard Time on Labor Day, it's done. It's over. It'll go right back up to $37, which is still a deal because you'll save you thousands if you implement the tax strategies that are in the guide. So please take advantage of this sale. It's my Labor Day sale. It is to kind of wrap up the tax planning series. It goes more in depth on all of those topics I was talking about, like at the end of July and all of August. It'll go deeper, into those tax planning framework areas. So you want to get this resource. That's something that you can use now and years to come to save money on your taxes. Actually, the subject that we're talking about today is one of the subjects in this guide. So yeah, go ahead and get that. If you're on Instagram, that's going to be the first link in my bio. You can get to that page to order your guide. On Facebook, I'm going to put that in the caption to this video. Okay. So you can go ahead. If you look at, actually, if you're on my Facebook business page, it's going to be the post from last night. It should be fairly recent. That link will be in there. But again, before you buy it, text the phrase beauty CPA to 21,000 to 1000 to get your $10 gift card. It'll bring that sale price to $9 for you. $9 for a resource that can save you thousands, not only in your business, but your personal life as well. So please take advantage of that. So let's get into what we are here to talk about today. I get this question so much. Do I need an LLC? Do I need a business entity structure? Do I need to be legal? Do I have to? What's the point? How much money would I save? What's the tax benefits? Let's get into all of that. Now, first thing I want to say is, and this is not to scold anybody, right? But if we are running businesses, beautypreneurs, we have got to start treating it as it is a business. And that means being as legal and legit as we can be, right? I can't think of a reason why you would not want to go get, at a minimum, an LLC. Now, some of the things that I hear about is, oh, it costs money. Not only does it cost money to create, but it costs money like every year that you have to pay to whatever state you live in, whatever state you're going to run the business from. And I agree with that. I agree, it does cost money. But that's the cost of doing business. That is the cost of doing business. And I think it's actually cheaper than you think. So I think some of the examples that people get in their minds that this is like some really, really expensive thing is because they'll go to like a LegalZoom, which will charge you $500-$600 for an LLC. But what LegalZoom is doing is, not only is it filing your LLC with your state, it's giving you the operating agreement to your LLC. It's going to find a registered agent for you, someone who can collect all the very important legal documents for you. What else is it going to? It's going to get your EIN, which is free anyway if you did it yourself. And it may do a little other miscellaneous things. But before you go to LegalZoom, do a little bit of research yourself, because I bet you can do it yourself through your Secretary of State, and it'll be a lot cheaper than LegalZoom. That way, you don't not have your LLC because you think it's too expensive. Okay, so let's talk about forming an LLC. Why would you do it? LLC is important to have because it is its own legal entity, separate from you. So when you first start a business, let's say you wake up and you say, I want to start a business. I want to, I'm going to create press-on nails. Very glamorous, pretty press-on nails. That's what I'm going to do as my business. At that point, you're just a sole proprietor. You're a sole proprietor. And from a tax perspective, when you file your taxes, you're going to report the income and expenses from your nail press-on business on a Schedule C that is included with your individual tax return. Sole proprietor. The difference between a sole proprietor and a single member LLC, so one person ran LLC, the only difference is that you have now gone to your state. I live in Illinois, so let's pretend my nail press-on business is based in Illinois. I went to the Secretary of State of Illinois and I've said, hey, Illinois, I have this business and I want to register it with you for a limited liability company. And after I've done that, now Kenesha Coleman exists separately from my nail press-on business. Because of that, now Kenesha Coleman is protected by the state of Illinois. So that anything goes down with my nail press-on business, those creditors or those who's ever suing me, they can only go after the assets owned by my nail press-on business. They cannot come after Kenesha's personal assets. And that's why the LLC, at a minimum, is what I recommend and what I strongly advise beauty entrepreneurs to have at a minimum is an LLC. The legal protection is priceless. Now, in Illinois, where I'm based, where my nail press-on business will be based, I think the annual fee to maintain my LLC is like a little over $100. The application to file the LLC, I think is a maximum. I think it's 2 pages. Every year I have to recertify, like file an annual report. That costs like $35 every year. After I've paid that like initial 100 something. Other states are similar to this. That's just how little the cost is to get this huge liability shield between yourself, your personal assets, and your business. So the benefit of this legal protection is way greater than this cost of the cost and the administrative burden of filing paperwork every year to maintain your business. Now, I do want to disclaim, number one, I am not an attorney or a lawyer, but this is what I do know. That legal liability protection you get from the state, it does not protect you from malpractice or gross negligence. So if you've done something like crazy wild in your business that hurt a client or customer or whatever, they could probably come after your personal things to recoup their financial loss or whatever they think that they're due because of what happened, right? So that's malpractice and gross negligence. You got to do something really, really serious that's like almost intentional to someone for it to fall under malpractice or gross negligence. But besides the very, worst case scenario, you're protected. No one coming for you can come after your personal things. They can only go for whatever's in their business. So that's why we want, at a minimum, the LLC. All right. Now, if you were not to get the LLC and you got sued, they're coming for everything in your business and everything in your personal life as well. And we don't want that. So if you do nothing else after this live, right, or whenever you have time, go to your state's Secretary of State website and just check out what the requirements are for an LLC. I'm going to bet you it's maybe 2, no more than 5 pages. And I bet the cost may be under $150. And then if you look at how much what you have to do every year, you would have to, at a minimum, fill out a 1 to 2 page annual report and maybe pay like an annual maintenance fee. I bet it's like $50 to $75 a year. But again, weigh that against someone coming after you and everything you own, both professionally in your business and your personal life. Weigh those two things, and I bet the LLC is going to win. Okay, let's move on from the LLC. Your LLC can be taxed. Let's talk about the tax implications now. Now, I often get asked the question, what are the tax benefits of being an LLC? When you're a single member LLC or even a multi-member LLC, which is the partnership, there are none. There are no tax benefits. There are a tiny bit, but they are dependent upon specific transactions, and I'll get into those a little bit later. But in general, when you become an LLC, that doesn't open you up to like a whole new world of tax advantages now. The LLC is literally just that legal protection for you. That legal protection and the fact that it separates personal from business structure. That's the only tax benefit. Now, when you are an LLC, you can be taxed as an S corporation or a C corporation. And that's when you can start to use your entity structure to get certain tax advantages. That's when that becomes important. When you say, okay, I'm an LLC, but now my revenue, my net income, or my business goals are going in a direction. Well, if I choose to be taxed as a corporation, I can come off better or on top from a tax perspective. So when we're thinking about what do you consider when choosing an entity structure, either when you're first starting your business or when you're thinking maybe you need to switch structures. Because remember, what we start out as is not what we have to keep. You can keep changing up as you see fit. So as you start out, it can be one thing, but then you're going to switch gears. For example, if you are a single member LLC, you're probably getting eaten alive by self-employment tax. I'm going to say, and it's just in my experience, this is not written in stone anywhere. This is, like I said, just from my client experience. That starts to happen. The client noticing that they're paying very high amounts of self-employment tax starts around between 30 and 40K of net income. So the money you have left over after you've paid all of your expenses, 30 to 40K, that's when you should be looking like, no, could probably save on self-employment tax if I switch to a different entity type. So that's one thing you need to consider when you're thinking about entity structures. Think about the tax savings. I went into some specifics the last time I went live. I went into some specifics during our tax planning series. If you pick up the Ultimate Tax Planning Guide that is on pre-sale right now, first link in my bio, I'm going to go more into depth about the monitoring and the evaluation of when you start out and when you should be switching in your business, when you should be switching these entity structures. So that's a consideration. Think about the tax implications. Okay. Another thing to consider when you're deciding on an entity structure, either when you're starting out or even while you've been in business for a little bit, is are you bringing on new partners? That is going to be easier or more difficult from a transfer of ownership and a taxation perspective for each and every different entity type. So whether you are a single member LLC and you're bringing on a new member, or you're a partnership and you're bringing on a new partner, or you're an S corporation and you want to bring over another shareholder owner, or a C corporation when you're selling stock, that is going to be easier or more challenging depending on the structure you choose. For example, the easiest structure by far is the C corporation, because the transfer of ownership is very easy. You just, if someone wants to own a company, you just go buy shares of that company stock. If they're publicly traded, even if they're private, you still just buy shares of their stock. For example, if I wanted to go buy some Apple, Amazon, Starbucks, what else do I love? Any type of coffee. I'm a big coffee fanatic. Samsung, I love Samsung products. But anything like that, I could just go on a stock market and just buy the share. That's just how, and now I'm an owner of that company. That's just how easy it is. That gets a little bit more difficult if we want to think about, say, like an S corporation. Yes, you can go buy shares of an S corporation. However, S corporations are limited to how many shareholders they can have, and there are very, very, very tight rules on the type of stock, the classes of stock that can be issued, and the types of entities that can be shareholders of an S corporation. No such thing exists for a C corporation. And then it gets even more challenging when we talk about partnerships and single member LLC. So that's one thing you think about. If you know very soon you're going to be bringing in other business partners or owners, think about the entity structure. How easy is it going to be to transfer ownership? What is the taxation going to be like when they hand over their money for equity? What tax implications are those? Because there are always some. Okay. The next thing to consider is investors. Now, if you are starting your beauty business and you know the end game is to sell, you have to consider that when picking an entity structure. This goes back into the previous conversation we were just having about bringing on new partners. When you're transferring ownership, an investor wants that to be seamless and fast. So your best bet is going to be a C corporation. They can just hand you equity. They can hand you money. You give them equity in forms of shares of stock, and the investor is happy. They're done. They have their equity. They have their shares of stock. That becomes more challenging if you were a different entity structure. No investor willing to give you money is going to wait for you to change your structure to be able to easily give them a piece of your company. So if you know your end game is to sell or to raise capital through an equity financing from investors, you want the C corporation. That's the easiest way to do it. But you got to consider that when you're choosing the structure in the first place. One more thing. buying property. Now, I have met beauty owners, let's say with salons and spas, and they have multiple locations, right? And then they have multiple either owners or investors. When you are dealing with property, right? If they own the brick and mortar property that their salon or spa is inside of, that property, whether it's getting contributed or taken out of the business for whatever reason, will have different tax implications depending on the business entity structure. So you always want to look at that. Also, let's say you have a bunch of properties and for whatever reason, you're getting sued. For whatever reason, you're getting sued. One strategy is to put the separate properties in a different entity structure than the operations of your business. Because you don't want the person trying to sue you to take your properties. Sure, they can affect the operations because that's probably why they're suing you in the first place. Something went wrong with operations. But how do we shield the properties? You could put them in a different business entity structure. That's just a very generic, general example. But when it comes to properties, there are certain tax implications that you need to be aware of, and entity structuring can help minimize any negative consequences of contributing or taking properties out of a business. It'll trigger, it could be the difference of you recognizing a huge gain and being taxed on it, or not having to recognize anything at all for tax purposes. So you want to keep that in mind. Now, I know I just went over a bunch when it comes to entity structures, but I'm going to wrap all of this up. And I'm going to give you my key takeaways when it comes to entity structuring. Number one, at a minimum, go get your LLC through your state secretary. It does not cost a ton. Do I recommend you go through LegalZoom? If you don't have the time or the patience, go through LegalZoom. But if you have time and patience, go to your Secretary of State website, take 90 minutes, do a little reading. You will see that it's not that complicated, and it actually does not cost that much. It costs way cheaper than LegalZoom. You get it way faster than LegalZoom. And you'll be aware of what you have to do annually to maintain it. All of that, again, is very, very small cost to this huge benefit you get from having legal protection from your state, because now you're a legal LLC. So at a minimum, get your LLC. Number two, remember, once you now have your LLC, just because you started that way don't mean you have to continue operating your business that way. Keep monitoring your business. Like I said, once you get around that 30K to 40K net income mark, look at the self-employment tax that you're paying. If it's high, you may want to consider switching to another entity type to lessen what you have to pay in self-employment tax. And you can do that by switching to one of the corporation forms, either the S corporation or the C corporation. Number three, when you switch, do not do this haphazardly. Actually run the numbers. Actually see, okay, if I stay with an LLC, if I switch to one of the corporations, either S or C, how much am I going to come on top? You cannot make that decision without running numbers. This is what happens. I'll give you an example. So if you're an LLC and you're like, oh my God, self-employment tax is really killing me. So you say, I'm going to switch to an S corporation. That's what everybody tells you to do. You can Google it. That's what you're going to find. Switch to an S corporation, which is fine. I agree. I don't disagree with that in general. But then people switch to the S corporation and realize Now they have to have a wage. They have to be on payroll. You as the owner have to be on payroll. You have to now pay yourself a wage and issue yourself a W-2. Now that wage is not determined by you. That wage is based on market research and research from the Department of Labor and what the other similar people of other professions are getting paid as well. All of that is some pretty professional research that is done. That number is not determined by you. So now you have a wage that you have to go pay someone to figure out what that wage should be. You have to be on payroll. You have to operate a payroll function now in your business. So you have to give yourself a W-2. You have to file quarterly payroll taxes to the Fed and to the state. You have to withhold on yourself, right? Now you gotta file a separate tax return because the S corporation is not included with your 1040 like your Schedule C is. Now you got a separate S corporation tax return with the feds and with the state. How much does that cost? S corporations can start at $1,500 compared to a Schedule C. S corporation returns start at $1,500. So, you have to, does that cost, now, does the cost of all of what I just said, is that still less than what you were paying self-employed? Probably, yeah, it is. But it's still something you have to be aware of, right? You can't just think you're going to switch to an S corporation and then all is good. You still got to, there are some more administrative things and things that cost money that you have to put into place. Not only that, when you're like a Schedule C, when you're an LLC, you could just take some, if you need to reimburse yourself from the company, you could do that very easily with a Schedule C. As a corporation, you can't do that. There's certain plans that have to be in place in your business to be able to have a reimbursement policy and procedure. It's a lot more administrative burden with an S corporation. That's my point. You're required by the state to have 2 board meetings a year and keep corporate minutes and all of this stuff. I mean, like, people get surprised at how much extra work it is. They just thought they was gonna switch and boom, self-employment tax cut in half or more, and they're good. Like, no, you got a little bit more work to do. So what I'm saying is, run these numbers. Those are my 3 things. Top three things. If you take nothing else away from this, take away these 3 things I just said. Number 1, at a minimum, get your LLC. Protect yourself. Number 2, monitor that LLC. As you make more and more money, you hit 30K, 40K, start looking at something else so you're not getting eaten up by self-employment tax. Number 3, do not make your decision to switch entities without running numbers. These decisions, they start and they shall end with numbers. Don't just haphazardly do this, okay? So if you guys got any questions, now is the time to drop them in the comments. While I give folks some time to type, I want to remind you that the pre-sale has begun. It has happened for Labor Day. If you go to the first link in my bio, Instagram, you're going to see the Ultimate Tax Planning Guide for Beautypreneurs. I created this because a lot of you didn't get the opportunity to get one of those free tax strategy sessions I was offering in August. But this product here, this will take you through the same tax planning framework procedure that I talked about all of August and that I use to identify tax savings. This planning guide will help you do that for yourself. These are strategies that I use with my own clients and myself. You can save yourself some money with the strategies that are in this planner. It is regular price $37, but it's on sale for $19, okay? Until Labor Day. If you text me the phrase Beauty CPA to 21,000, so Beauty CPA, all one word, to 21000, I'm going to send you a $10 off gift card. That's going to bring the planner price down to $9, guys. That's a $9 product that can save you thousands in your business. Not just this year. You keep this guy, you use it for, years to come. So again, get $10 off the sale price. Text Beauty CPA to 21000 and you'll get that $10 gift card to bring that price one down for you. It's going to be on through Labor Day. So I'm not seeing any questions, no comments. I know y'all shy. It's fine. Let's see. We're going into Labor Day weekend. What I'm going to be talking about from now on, like I said before, I just wrapped up the tax planning series. It's September now, and because we're going into the extended tax due dates for September and October, I'm going to take it back to the basics, y'all. Like, I'm going to be giving you things, everything we're going to be talking about from now until the final tax due date, which is mid-October. All of that is going to be centered around giving you tips, tricks, tools, strategies to help you lower those taxes. Okay? Now, it's not again, that's why I'm trying to really stress the importance of tax planning here. When it's tax time, it's not a ton you can do, right? There's some, but there's not a ton. That's why now is a great time to still, get all these strategies together. So come next year, you paying less money for year 2021. In 2021, which is next year, you're paying your 2020 tax bill. We still got time to lower that 2020 tax bill. So that's what we're going to do. I'm going to be helping y'all get together this tax return for mid-October, mid-September. And I'm also going to be still making sure you can do things and got strategies to lower your current tax bill. Okay? So with that, I'm not going to take up too much more of your time this afternoon. Have an awesome day. Have an awesome Labor Day weekend. I might pop in on Saturday just to see what y'all doing, where the party at. Still be safe though, social distance, wear a mask, all that. But yeah, have a great weekend. And again, to get that $10 off, Beauty CPA, all one phrase, to 21,000, 21000. All right, y'all. Thank y'all so much for giving me your time. Again, have an awesome day, awesome weekend, and I will pop in to say hi. Maybe Saturday. All right. Thank you.